Hi, everybody. My name is Adeo. I'm CEO of the Dessel Group. I'm also executive chairman of Founder Institute. We run at Dessel Group programs like VC Lab, which launches roughly probably more than 60% of all new venture capital firms and funds worldwide. We also have programs like the Emerging Institute, which helps emerging managers launch Fund 2 and Fund 3. And we run something called the Venture Institute, which, if you want to learn about venture capital, but not necessarily start a fund right away, you can do something like the Venture Institute. And the reason we do all that, just our why, is our reality today is shaped by the decisions that venture capitalists have made in the past. So I'm drinking out of a plastic bottle somewhere in the past. Someone funded something that allowed plastic to be manufactured in the way that it is, the color purple possibly to be invented, et cetera, and all and put into the plastic mix. And all of these inventions shape the world that we live in. Yet the industry of venture capital itself is really inefficient and corrupt. It's run incredibly poorly. It's at best a cottage industry. It has incredibly low ethics and morals, and yet it is funding the future of humanity. So I said, look, I want to change the world for the better. I want a bright future for my children and for everyone on the planet today, as well as the animals and humans. And that's just not going to happen with if you have largely unethical, largely immoral, mostly money oriented, short term thinking individuals funding the future of humanity. So I said, okay, I'm going to fix venture capital. And so the Dessel Group, which is the parent company of VC Lab and all these training programs, went out and created training, tools, and capital to really rebuild the venture capital industry on a foundation of principles and morals. Our morals are very clear. We've created something called the Mensarius Oath. You can look it up, or maybe Domenica can put a link into the chat for you. It's a series of ethical or moral, almost like the Hippocratic Oath, that we ask investment professionals that we work with to agree to. And these ethical and moral principles are higher than the law, right? So when you deal with ethics and morals, the law is the floor. If you're like not breaking the law, but you're almost breaking the law, you're hanging out at the floor, that's not where you want to be. We want to stand up and be beacons of light for how things should be done correctly in the world. And so our training is free because we want to help as many people launch ethical and moral venture capital funds that want to make this the future of humanity bright. Our tools are free because we want to help people with funds to be successful that are working on things that matter. We want to ensure that they have an unfair advantage compared to their peers who are not using such tools. And we not only are our training free and our tools are free, but also we invest in funds led by managers who we think are making the world a better place. And just to give you a sense of scale on how things are doing, our fund of funds, which invests in these funds that we help to create, is doing roughly a 3x. So it's return, if you put $1 in, you would have $3.30 roughly right now. And it's under 3 years old. So, you know, it's possible you could invest in the stock market and get a 3x. That definitely might have happened in the last two and a half years or so. But unlikely. So and fund to funds are very safe investments because they almost never go to zero. They almost always do above a one because you're spreading the risk out fairly widely. So to have a 3.3 in under 3 years is endemic of how strong the performance of our network is compared to the normal investment returns. And remember, are standing on a higher ethical footing. So not only are we more ethical than the normal set of firms and funds in the world today, they are performing much better on average. And you may ask how we make money. That's a good question. So we actually also make money. We provide back office services to help run your firm and fund, and 100% of every firm and fund in the world pay for these services. And we provide these services often at a radically better value for our customers than anyone else does. So we're faster, better, cheaper. Just to give a sense, we have a 94 net promoter score, NPS, for our back office. So that's us in a nutshell. Let's get to your questions. If you want, when you ask a question, you can put it in the Q&A and hit the upvote button. I see like there's some people with like multi-part questions like or Puvan, sorry. Puvan, I'm just going to archive your question and you're going to need to do it as one at a time. I really can't go through five or six or three questions in one. You have to do one question at a time. All right, so I'm going to just get started with some questions. The current cohort 21 that we're recruiting for, Jake is asking, is about specialization. Why is that? And is there a precise example? Absolutely, Jake. So, specialization is not you may be thinking of the English word specialization. We're talking more about specialists, not specialization, but they're somewhat related. So in venture capital lexicon, they're generalists and they're specialists, okay? Specialists are investors with deep domain expertise that understand a certain segment of a market, a certain vertical very well. So they might be a specialist in drug discovery. They might be a specialist in AI powered robotics. They might be a specialist in SaaS pricing models. And these specialist investors are outperforming generalist investors massively. Just like it's not even close. Limited partners, just to give you, and these are the investors in venture capital firms and funds, roughly 83% of limited partners prefer specialists over generalists. So if you're say, hey, I'll invest in anything that moves, you're a generalist, and only 17% of limited partners today want to invest in generalists. 83% want to invest in specialists. So we're focusing on specialists because that's where the market is. That's what investors want. That's the future. So we're trying to follow the trend lines in the right direction. Angelica's asking, have you seen I think there's a typo, but she's asking traits of great first-time VC fund managers. Look, Angelica, it's yes, but at the end of the day, none of that really matters, right? So you can be a great investor And we've certainly helped many like truly fabulous investors. But at the end of the day, your success as a venture capitalist, a first-time fund manager, will boil down to your ability to raise capital. So there, what we call fundraising momentum. So if you have a great investor with poor fundraising momentum, they will fail. If you have an okay investor with great fundraising momentum, they will succeed. The main trait of a successful new manager is their ability to go out and raise capital from limited investors at a regular and fast pace. So there are people who can raise a bunch of money from limited partners and then stop. That's not good. They lose their fundraising momentum. So you need to not only have good fundraising momentum, but you need to maintain that momentum. And those are the best uh, new and emerging managers, those who can maintain strong fundraising momentum. Um, I've been, Anjul is asking, I've been juggling between entrepreneurship and venture capital. Uh, Chose to be a founder first. Uh, Makes sense or okay to jump into. Look, they're very different things. Like you can't be a VC unless you've achieved success in life. Not 100% of the time. We have some student VC groups that are achieving success. We have some people who, and of course, if you have a student VC, that's really your first job out of school is being a VC. But for the most part, venture capital is a networking game, right? You have to network in order to get the deals, and you have to network in order to get investors into the fund. So you need a strong network for investors and for deals. And so, how do you build your network? Well, you have to have experience. So if you don't have a decent amount of experience, you're not going to have great deal flow and you're not going to have great investors. So student funds struggle. They tend to get deal flow from the student body, so that's okay. They struggle to get deal flow outside of the student body. And they really struggle getting investors. So they tend to try to raise from people they know within the university context, which means they have much smaller funds and they struggle with fundraising momentum. So they have a much more difficult time to break out. So, you need to have a very powerful network. Now, look, sometimes you go to a great school, you leave school with a great network, you get some working experience that puts you in front of a lot of people early on, and you can start a fund on the younger side because you've built a network very quickly, right? So it's not founder or VC, it's really how good is your network. And if you don't have a good network, it will be very, very difficult for you to start a fund because running a fund is a networking opportunity, networking business. Um, okay, so Angelica corrected her question. Eduardo is asking, VC Lab has a reputation for being a pressure cooker. Based on my background as an operator founder, where do you see people like me typically struggle or excel in the program? Look, we're not it's not an incorrect characterization, but it's like all characterizations. Saying VC Lab is a pressure cooker is somewhat true and somewhat untrue. If you're coming into this program, you need to be serious about starting a fund, right? So if you're like, I'm not sure I want to start a fund, uh, don't join VC Lab, right? VC Lab is for people that are certain that they want to start a fund. Now, you may come to the realization in the program that, whoa, this is a lot harder than I realized, and I don't want to do a fund anymore. Lots of people come to that realization. I would say there's three major issues that arise in the program. First, the program is not for everyone because it's like, look, if you want to do a fund, here's how to do a fund. Start working on your fund, start raising money, start doing this. We lay out a roadmap for you to get a fund in about 4 months or less. We have some people now that get it in 2 months. I think we're seeing most people close in about 4 months. If you were to go out on your own and try and launch a fund, it will take you 18 to 24 months, and we're bringing that down to 4 months. But that's because we're like, do this, do that, do this, do that. Some people don't want to follow a playbook. They're like, I would rather learn on my own the hard way over 18 to 24 months. So if that's the case, they drop out, no hard feelings, that's okay. A second group of challenging situations in the program is like someone realizes, hey, I thought I wanted to do a fund. I realize it's a lot harder than I thought. And so I have to go back to the drawing board and reevaluate what I want to do with my life. And they drop out. And then the third group is, whoa, this is really intense, but I want to do it. I'm just not ready at this moment for whatever reason. There could be an illness in the family. You may have still have a job or whatever. And so those are the three things that we see. Like, I want to go my own way, right? Okay, whatever, no hard feelings. VC is not for me, or hey, I'm not ready at the moment, right? But, in terms of it being a pressure cooker, it's like, look, if you want to launch a fund, here's what you need to do, right? Step by step, week by week. We take you through it. We answer every question you have. We help you however we can. We want you to win. Like, we're not creating, all right, let's take it one sec for I had a glass of wine last night. I don't drink that much anymore. And I was like, how bad is a glass of wine? But man, it's like when you don't drink, even a glass of wine isn't great. So it's more like I need more water this morning. How do I say this? We're trying to fix the world. We're trying to fix the core innovation engine that makes our future bright or makes our future dark. Okay? So the funds that we launch must be successful in order for our vision to make this world a better place to come into reality. So we're going to do everything that we can to help you, right? We want you to win because you are the future that we believe in. Okay? So but if you're not ready or you're not able or it's not right for you, that's okay. It's not pressure. We care. Okay? We care. We really care a lot. And you are our means of caring. Your success is our success, not just our success like Adeo's success, like our collective success. Because if you have good values, if you have a vision to make the world a better place, you should win, right? We want you to win, right? We want you not to win a little. We want you to win a lot. We want you to embarrass the peers that do not have ethics. Because I want to say that you could be a normal fund and you're going to do a 2x, or you could be a Decile Group fund or VC Lab fund and you're going to do a 6x. I want our funds to be 3 to 5 times better than the other funds so that there's no question in the world that someone working on something that they care about, that's going to make the world a better place, will just crush the competition who doesn't share those values. Okay, sorry I over answered there. Let me go a little faster here. What do you guys help with when it comes to first time VC fundraising? I mean, everything. We tell you, we help you get LPs, we tell you how to get LPs. Look, I'm not going to say we're going to bring you endless LPs. That would be a lie, and anyone who tells you that is lying to you. All right? There's a lot of people who have no ethics in this industry. Um, and yeah, it's a very unethical industry. But we will, this is a situation where we'll teach you how to fish, right? We'll teach you how to get LPs so that you don't have to rely on us to get LPs. We're going to teach you how to run the fund. We'll show you how to run the fund. We'll give you the tools to run the fund. We'll give you the tools to get LPs. I mean, I'll show you something that's really cool that we just released internally. Get ready for this. I'd love in the chat for you guys to tell me how cool you think this is. Um, so this is our new LP finder. So it pops up. I can show you, you hit a button over here, fundraising agent. You say, I want to look for friends or family offices and these sources, what tier you want. There's a free tier. You hit it, and then it starts doing the research up here in purple. And then you'll see boom, boom, boom. It starts popping in LPs for you to reach out to down here. And then boom, it says, hey, do you want to send an email to introduce yourself, invite them to an event, or share news? So look, we're trying to make things as easy as, how cool is that in the chat, by the way? Is that cool or uh, not cool? Could not, super cool. Okay, yeah. So that's coming out this week. I'm able to use it myself. And it does, and you can tell it all types of parameters. So we're helping you as much as we can. But at the end of the day, you have to do the work. And look, we have AI tools that will put the model together for you and make it. Let me show you that. You want to see something else? Who wants to see something else really cool? Anyone? Yeah. Okay. All right. I'll show it. Fine. All right. Let's go back here. Let me go here. So, in the past, sorry, I have a lot of windows blocking here. You had to do a lot of stupid work yourself that was tedious and difficult. So we created all these toolkits, build a pitch deck. I want to show you one in particular. So I'm just going to start over on this one because it saves the work. So I'm just going to go back. So start a new conversation. So this is going to build your fund model by just chatting. So you're going to chat with it, and this is live, so this is actually happening right now. So it says, "Hey, I see you're doing a $3 million seed stage fund with a conviction-based approach. I'm going to say no, even though I said 10, I'm going to go for 20 investments. Um, the top exit, I think, will be $1 billion. I think my middle exit will be 500 million, 500 million, that would be better. And my low exit's going to be 100 million. All right. I'm going to hit it. And now the AI is going to build a comprehensive fund model for this parameter because it already knows my thesis because my thesis is in the software. It knew I wanted to do 10 deals, although I told it to model 20. And it's loading all this stuff in. And now it's saying, okay, so here's the model. Overview. Boom, this, a management fee, tell management fee waterfall, number of deals, 20, average investment per deal, because it can figure all this math out, target valuation. Now look, that now it's saying like how many companies, my thing, and it's coming up with scenarios, medium scenario, high scenario. But let's say I look at this and I say, I don't think I'm going to get I think it said my ownership percentage was a little bit high at, oh, no, that's actually a little bit low, target ownership at investment. So I could say my target ownership is 1.5%. And then it's going to just update the model with 1.5%. If I wanted to, it's going to, so I don't want to, there are lots of questions. You can get the idea of what it can do. And this used to be like extremely tedious work for managers in Excel and this and that. And you certainly couldn't say, I want my target ownership to be 1.5%. You would normally have to change multiple rows in a spreadsheet to adjust what your ultimate ownership is, the valuation, your entry, this, And now you could say, I want to target like a 2 TVPI, which is at the way bottom of the sheet. And it will work its way back up and figure out what needs to happen to get you a 2 TVPI. I mean, this is magic, guys. And it makes your life so much easier. And normal LLMs can't do this. We had to teach our own LLM how to do the math. Normal LLMs don't know how to calculate dilution correctly. They don't know how to calculate a lot of the core principles in here correctly. So we had to teach our own LLM on how to do this in order to provide these tools for you. Let me go back. My Q&A button hid here because I have like a gajillion windows open. Where's the Q&A? Hopefully that was really cool. Record, share. What? Oh, there it is. All right, let's keep going with Q&A. Um, so I hope I answered your question. All right. Eduardo's asking, for most successful managers in the previous cohorts, what's the number one hurdle they faced when moving from thesis to first close in the first 14 weeks? Um, I mean, guys, all right, asking for money in venture capital is not the easiest, right? It's not super hard, but it's not, so you're not pitching a startup, all right? You're a professional money manager. So in a startup world, you're like, I have this startup, right? This startup does this, invest in this, right? When you're a professional money manager, you're not like, I have this thesis, invest in this thesis. You're like, I'm going to take your money as a manager and I will invest it in these things, this thesis. So if you are interested in investing in this, I'm your guy or I'm your woman or I'm your whatever, right? So you're the money manager. So it's a very different pitch than a startup. And I think that's challenging for most people to make the leap from having pitched things like a business or a startup or a product in the past to pitching yourself as a money manager. That is definitely one of the more challenging things. Ali's asking, I'm from Pakistan and building a startup. What do you suggest as a founder bootstrapping my startup? For the most part, Ali, I'm going to answer VC questions here. So, Domenica, if you could archive founder questions in the future, but I'm happy to take some founder questions. I am a founder myself. Uh, so, look, Ali, um, you right now is one of the best times in human history to be a founder. You don't need a lot of stuff. There's Claude Code. You can, there's Open Claw. There's like all these things out there, tools that you don't need a team. You can do most of the things yourself. The founder of Open Claw is the first solo unicorn. He created OpenClaw and OpenAI acqui-hired him and paid him $1 billion. All right. So if you have a big vision you can, as a single person in the world today, create a $1 billion company just like the founder of OpenClaw did. So I would focus on finding product market fit and getting people to really love what you build using vibe coding tools and the like so that and watch your um, product or offering really take off, and that's all I would care about. I wouldn't really care about, and look, there's lots of strategies here. You could do a big strategy where you create one thing and try to have it take off, or you could take a portfolio approach where you have a lot of little things that get to a smaller size, but collectively they're quite big. So there are lots of strategies, but at the end of the day, I would make something that people want and try to have that scale first and foremost. Um, HH is asking one of the questions in the form asks about how much money I've raised so far. Ones I haven't raised any money, but I have the network to go for. Yeah, I mean, as I mentioned, raising money in this situation is challenging because it's not like a startup. It's not like a company. It's not like selling a product. So if you have experience fundraising for venture, we want to know. That's a huge plus. But there's a lot of people who don't have any experience at all, and that's fine too. You don't need tons of fundraising experience to launch a fund. If that were the case, there wouldn't be new funds. And we're launching about 300 new funds a year or so. New firms, new funds, they're interchangeable. So you don't need experience, but it's a major plus. Um, I was part of VC Lab Cohort 6 and I had to drop out because my work deadlines piled up. I'll have similar weeks of deadlines pile up coming for this cohort. I'm afraid not to be able to finish all the sprints on time. Look, Medina, if VC Lab, if you want, then don't go into VC Lab. Go into Venture Institute. VC Lab is for people who want to start a venture capital firm and make that their career. If that's what you want, VC Lab is the place to go, but you're gonna have to end your current career and start a new career during the program. Otherwise, you won't be able to really launch a fund full time and turn it into a resounding success. We have a product called Start Fund that allows you to set up a fund in a day that's institutional grade. But because of how we've orchestrated the fund vehicle and all this stuff, no cost to you. It's completely free. And you can work on the fund on nights and weekends. It doesn't need to be a full-time thing. Many people are doing their start funds full-time. I would say most, but not everybody. Start funds are designed for managers who want to be part-time as well as for managers who want to be full-time. And if you want to do a part-time fund and get the experience to learn how funds work, we have a Venture Institute program which teaches you venture capital. It's a much slower pace, and you can do a start fund. But VC Lab is like the A game. It's like the Ivy League, if you will. I don't love the Ivy League, but as an analogy, it works. It's the Y Combinator of venture capital. So it's the A game. If you want to go into the A game and you have other responsibilities, it will be difficult for you, right? Now, look, doesn't mean impossible. There are lots of people who keep a job, go through VC Lab, launch the fund, quit their job, right? But if that is not possible for you, then maybe you do something like the Venture Institute and a start fund, which is a perfectly great path. Ruby's asking, what's your stance on being ethical? What would you make? What to uh, I think you're asking what would make an unethical firm. Though it wasn't phrased exactly that way, but that's I'm trying to decipher it, so I think I got it. Is percent of equity taken for amount of investment? I guess that's a question like about ethics and types of firms invested into. I mean, look, ethics are we could talk for a long time about ethics, because I take ethics very seriously. There's lots of things that make an ethical and unethical firm. Some of the things you brought up, like the percentage of equity taken, that's definitely like so. So let's go through some of the things in the Mensarius Oath, and I think that will help answer this because the Mensarius Oath is has many. That's really cool. Google puts it like first and like actually does the whole thing, so I don't even have to go to the site, but I'll go to the site anyway. So integrity. I vow to invest with integrity, ensuring my actions benefit humanity and consciously avoid harm to any parties. So I can tell you today that most VCs are out there to screw you. Like full stop. They have their job is to get equity from you and then to maximize their return at the time of exit, often at your expense. Full stop. They will throw you under the bus. And the very first point of our code of ethics is you should not throw people under the bus. Like, like that's not the way to operate in life. I mean, you know, like the world stopped in COVID to save the old and the sick. Okay. We care about people. Venture capitalists do not care about people. They will throw their portfolio companies under the bus at the first opportunity. And our first ethical principle is no, don't do that. And, just to go on, respect, I'm jumping around here. We say, I promise to treat individuals and opportunities with the respect and attention deserved in the business, in business interactions. So it's like treat people with respect. Like one would hope that's obvious, but again, in venture capital, that hasn't been happening for a long time. So look, again, and then there's actually just straight unethical things that venture capitalists do all the time. There's so many that there's not enough time to go into them. But I will tell you this. So in the Emerging Institute program, we take in people that went through VC Lab and we take in people who didn't go through VC Lab who are working on Fund 2 and Fund 3 and sometimes Fund 4. I find unethical behavior of unconscious. They didn't even know that they were being unethical all the time. Every time with people on Fund 2, Fund 3, and Fund 4 that have not been through VC Lab. I do not find any of those problems with people who have been through VC Lab. Now, some of them are so bad that no professional limited partner, institutional limited partner will invest in these funds because they've really broken some core ethical principles. Um, How do LPs evaluate venture platforms that are structured around sovereign or government-backed innovation ecosystems where deal flow is generated through national accelerator programs rather than traditional sourcing? I mean, I don't think, look, there's, let's take even a bigger step back. You have a vision, right? That's your thesis. You have a personality, background, track record. That's you as a person. And then there's the LP and their interests. This forms a triangle. Your experience, the thesis, and the interest of the LPs. So if you set things up correctly, your experience, and the thesis and the interests of the LPs all align in this perfect triangle. They invest and they back you because they believe in what you are trying to do. So it doesn't really matter what you're doing as long as you can form that triangle of your background, the thesis, and the interest of the LP. So there are no like LPs out there that are like, oh, I'm an LP. Like, I like being an LP. There are people who invest in venture capital that are interested in maybe your region, or people that are interested in healthcare, or people that are interested in manufacturing. And so like I'm the top manufacturing expert in the world in this type of process. My thesis is to back manufacturing companies that are using AI to bring their businesses into the future. And I found an LP who's a big corporate and produces manufacturing equipment. That's the triangle. So there's no like, what do LPs think about X, Y, and Z? There are no LPs. They're people who have interests that you present your thesis and your background to and hope that you create alignment. That's how it works. What happens if you aren't able to raise, um, uh, starting with no contact, just on the basis of domain expertise? It's a good starting point. Like, look, if you can't raise, you don't have a fund, you're not going to finish VC Lab and you're never going to be a venture capitalist. So it's kind of raise or die. I mean, in order to be a VC, you have to invest money. That money, unless you have it, is coming from other people, OPM, other people's money, as it's called. So you have to find the other people with money in that triangle that I just discussed to have a fund at all. Otherwise, you won't proceed. Um, for emerging venture firms building cross-border innovation corridors, for example, between India and Asia, and how important is geographic specialization? So look, guys, LPs, I will say this, limited partners don't like investing in cross-border opportunities, and not necessarily cross-border opportunities. It's I'll give an example. So there are a lot of people are like, I'm launching an African fund. Well, there's lots of countries in Africa. I don't know the exact number. I can ask, but it's a big number because I've been to how many companies, how many countries in Africa? And Africa is like a 54. Okay, so there are 54 countries in Africa. And there's Francophone Africa. There's the Southern Africa, Northern Africa. Africa is not homogeneous at all. Like America fits within Africa, just a little teeny piece. So it's a very big place with 54 different countries, 54 different legal systems, many different languages, tribal customs, colonial issues, blah, 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 blah. So the idea that you're going to invest in Africa it's like detached from reality because Africa is enormous and very diverse. And every time you make an investment into a country, you are essentially you're a pass-through vehicle as a firm and a fund. So you're taking LP money and you're putting it into wherever, a country in Africa, a country in Pakistan, a country in Asia, a country in Allah. And so the LP is therefore themselves investing in these countries, and they're subject to the laws of the countries, and they're subject to the tax regulations and tax treaties of the countries, et cetera, et cetera, et cetera. This is like, who here would like to file taxes in 10 countries next year? Tell me in the chat. Just say, I would like to file taxes in 10 countries next year. If you would like to do that, let me know in the chat. My guess is most of you don't want to file taxes in 10 countries next year. And let me tell you who else doesn't want to file taxes in 10 countries next year. LPs. So when you're like, I'm investing in Africa, what that means is like you'll probably do deals in multiple countries, and the LPs either next year at some point will need to file taxes and deal with regulations in every one of the countries that you invest in. That doesn't sound like a winning value proposition to me. So you need to think from the perspective of the limited partner, not from what you think is a good idea, because you're investing their money into companies. So you need to put yourself in their shoes. Um, in reference to fundraising momentum, is matching founding partners in a fund part of the program? No. You must know the person you work with on a fund for at least 5 years or more. You will work with your fund partner for a minimum of 16 years. So when you start a venture capital fund and you have a partner, you are making a 16-year commitment. Like now, so there's no like, hey buddy, meet hey Sally, meet Joey. You and Joey can go start a fund. It's gonna be amazing. Tell me how it goes in 16 years. Like, no. It's like not like it's not like this isn't speed matching. You're making a 16-year commitment to another individual. You must know them very well. Very well. Capital V, capital E, capital R, capital Y, very well. All right. So there's no matching to meet a GP. That's fantasy land talk. And by the way, you should sue me and be like, you lied. You said you could find me a GP and they turned out to be a criminal or whatever. And I would be like, you're right. I'm an idiot. I matched you with someone. If I did that, I'm not going to do things that are stupid. I'm not going to tell you to do things that are stupid. I don't endorse doing things that are stupid. That would be stupid. You said maybe bets that looked insane and turned out right. What's your best example of this? Fabio, someone asked me this in the AMA on LinkedIn. Maybe you could put that in the chat, Domenica, on LinkedIn. I have let me see if I can find it and I can put it in the chat. But I did a AMA in LinkedIn. Let's see. It had a lot of questions on it. Man, I was like, whoa, lots of questions. Uh, and I did my best to answer them all. But I actually answered this specific question in that. So I'm going to paste the link into the chat right now. Here you go, everybody. Uh, look, there's a lot of crazy things that I've done in the world that did not seem to make sense and turned out to be very big. Um, it was my idea to go into space on a kind of infamous car ride with Elon Musk, and that led to the creation of SpaceX and many other space industry initiatives. And at the time, I was 28 years old, I think. And so the idea that like a 28-year-old super successful young kid could birth a private space industry was nuts. And there are many examples, though. Just because something doesn't make sense in conventional wisdom does not mean that it's a bad idea. Can you share insights about how to nurture relationships with high net worth individuals who can be a first time LP? Um, Look, your job is not to educate people to be an LP, right? Your job is to find LPs to invest in your fund. And if they need education, leave education to someone else. Right? That's not your job. It's like, not only am I a VC, but I'm also a LP educator. Like, nah, like that's like terrible value proposition. Your job is to raise money, invest it, and make great returns. We have some LP training programs, um, and you can send them our way. If you go to decelgroup.com/AI, there's a pretty good LP training program powered by AI. Um, and that is, yeah, somewhere you can send them and have progress. Iris is asking if you need a partner to launch a fund. Absolutely not. About 65% of our funds launch as what are called solo GPs. Someone's writing an answer to Iris, but so if you could mark that one as read, you can totally start a fund on your own. Matthew's asking, what are key pieces someone should have in place before joining VC Lab? Examples, extensive personal network, deal flow, etc. You don't need anything. You did like, look, the more experienced there are plenty of people who come off the street and don't even have a really good thesis and they launch their fund in 4 months. In fact, I would argue most people come into the program thinking they have a good thesis and they have to redo the whole thing during the program. So you don't need anything. You just need really a desire to do it, like a serious desire to do it. That would be number one. You need to have some sort of valuable network. If you have deal flow, that's good. If you have some investors that might invest in your fund, that's also very good. So the more valuable your network, the easier the program will be. But at the end of the day, we've had students come in with not a great thesis and not a great network and launch funds. So you don't really need much. So need is a strong word. As I said, if you have some thoughts on a thesis, that's a little bit better. And if you have the stronger your network is, the better it is for you. But need is a strong word. You don't need much. All right. Do you see space for a fund that supports diverse founders in the US? One that actually takes risk and lead those investments? Um, yeah, look, diversity is a popular. If you're saying a lot of our funds, like 35 to 40% of our funds, have some sort of diversity angle in their thesis. So if you are unaware of funds that are funding diversity, you have not looked hard enough. Now, the problem is that you can't talk about your firm and fund publicly until you raise all of the money. So there's laws against this. So you may not be able to search firms and funds that back diverse founders because they're fundraising and they can't have a website and they can't talk about it. But there are literally many hundreds of funds focused on this right now, doing very well. Um, Wait, you don't need to have a license in most countries to manage other people's money. Yes and no. So some countries, yes, Europe, you need a license. In Singapore, you need a license, and you have to file special things in various countries as well. So depending on the country, you either need to get a license, and that would be Europe, Singapore, and a few others. Or you just need to file special things like the US and most of the rest of the world. And when you set up a fund with a vendor, they often take care of at least the filing component for you. In Europe, it's kind of, and Singapore is very difficult to get the license. Tejas is asking, how confidently can you say that doing this course seriously will make one successful? Uh, I mean, look, so 25% of those that start the program finish with a closed fund. 75, it's a little higher than this, so it's maybe like 25 to 30%, but roughly 75% drop out for one reason or another, or we remove them because they're not doing anything. So, I would say I'm 100% confident that 25 to 30% of the cohort will successfully raise a fund. Um, those are the ones that listen to our advice and do things correctly. The 75% that don't make it to the end, they either don't take it seriously, they don't listen to the things we talked about before. They don't listen, they realize it's not right for them, or they want to come back at a future time. So I would say I'm 100% confident that somewhere between 25 and 30% of the program will close a fund because they listen, because they're serious, and because they're ready. And the rest don't listen, aren't serious, or aren't ready. They think they are, but they're not. And I want to talk about listening for a second. We're not telling you like go do this because we're some Orwellian control freak with like, you know, we're telling you like, if you want to launch a fund, you need to do this, then you need to do this, then you need to do this, then you need to do this. And like, we've launched over 1,000, we're approaching 1,200 firms worldwide. We're over 60% of all new firms worldwide launch with us. Okay. At this point, there's no one in the world who has launched more firms than we have. I'm not here to tell you something wrong. I'm here to tell you what you need to know to launch a firm and fund. If you don't want to listen, that's okay. Like, I'm not, don't, I'm, well, all right, try your way. Like this way works. If you want to try a different way, okay. Like, I no hard feelings. I'm telling you the way that works. Like, how do we know it works? Well, it works for 60% of all new firms and funds worldwide. Some of the dropouts come back and launch a fund, and some of the dropouts launch a fund on their own. The number that launch a fund on their own, I think we have about 4,000 people that have not gone through, dropped out for one reason or another. And it's like on two hands are the number of people that have launched firms that have dropped out. So, you can do it your own way. It's just super unlikely. Ned's asking, what if my country doesn't have casual number of deals and focus sector? Um, then you shouldn't do your focus sector. Like you need the number one predictor. I know we're over here, and I'll do like three more questions. So we'll go 8 more minutes. The number one ability for you to be successful as an investor after you have fundraising momentum is deal flow. Now, look, it's easy to get deal flow when you have money, right? It's like, I have money. Oh, I have a deal. Um, so I don't want to make it seem like, but if your thesis area only has a very small number of deals available, right? It's going to be very difficult for you to succeed. Because let's say there's only 10 deals, you're going to have to invest in all 10, right? So you really do need a adequate number of deals in your chosen thesis sector in order to get returns. Um, I'm going to ask an MBA or CFA, which is more so you don't need any of that. Guys, education is over. Like I just showed you that you can build your whole model with our custom LLM in a second. Like you don't need an MBA, right? You need a thesis, you need a network, you don't need education is done. Like I'm still a proponent of education for socialization and like learning some things that you don't need uh practically. But in terms of like the practical use of education in a field like venture capital, it's unnecessary. Um, Let me go to a couple more questions here. Okay, there's some, hey, Domenica, there's some repeat questions. Maybe you jumped off. Can you still join the program if you don't want to start fundraising in the coming year? No, you have to be serious about fundraising. You can join something called the Venture Institute, which allows you to learn about venture capital without necessarily starting a firm and fund. Um, so if you're not ready to start a fund now and you want to learn, we have a program called Venture Institute that also allows you to start a fund if you wanted to part-time. VC Lab, though, you will be fundraising in the program. And if you don't make progress, today, for example, is a review day, and there's about 180 people in the program. About 100 people of the 180 were behind in fundraising. So we're going to remove at least half the class today that was not able to get their fundraising done. And look, it's like if you aren't able to get money, then why are you in this program? Like the purpose of the program is to help you raise money to close. If you can't raise money, come back when you can raise money, right? We can't figure out why you can't raise money. Speaking of which, Eduardo's asking if I already have soft circled amount from my network, how does the program transition these handshakes to packs? And other legal documents. Yeah, so we walk through everything. Back to the tools I was showing earlier, we have practice pitching tools, we have tools to help you craft messages, write emails, all this stuff, and we teach you, we role play in the sessions, like pitch me, okay, here's what you did well, here's what you did wrong. So you will learn how to ask for money as a manager in the program, get commitments, close on those commitments, and launch your fund. That is definitely a big part of the program, and I would say we do it rather well. But there are people who don't listen, that aren't ready, that don't have the time at the moment or don't want to do it, and then again they don't get to the end. Okay, a couple more questions here. Someone's asking, what are the best sources to learn about, Approve is asking, what are the best sources to learn about VC? Just go to desselgroup.com slash AI, desselgroup.com slash AI. There's a great AI tool. The problem is all the books are out of date. All the LLMs don't have any information on venture, or it's really old or wrong. So we have built our own LLM essentially. Uh, we call it Decel Base. We have a huge knowledge base of articles that we've written, questions answered by top professionals in the field, and that informs the knowledge base. So you're going to get your question answered very accurately. Um, do we need to choose a fund admin during the program? No. We recommend, for some, not all, working with us. Not everyone it makes sense to work with us as fund admin, but lots of people choose other fund admins. There's some people we don't work with. We generally don't work with dual use funds, for example. So we'll let dual use funds into the program, but we will not work with dual use funds on fund admin. So there's a lot of things there. All right, guys, we're nearing that point. I'll do one more question. Let's see. So many questions. All right. Helena's asking a good one. How do you see a fund manager sustaining themselves if they have a fund under $50 million? That's the last question. All right. So, guys, here's the thing. You don't need a huge fund size to survive as a manager. Any fund size is fine, actually. Let's use an example of a 10x smaller fund, a $5 million fund. So in a $5 million fund, that will net $1 million in fees over 10 years. So that would be 50,000 a year for 10 years. Okay. Now, of course, you don't do 50,000 a year over 10 years because in year 10, you don't have the expenses that you have in year one. You have most of your expenses in year one, and you have the least expenses in year 10. So you do what is called a management fee waterfall. So for the first 3 years of the fund, you may take $100,000 and then $50,000 and then $25,000 and then $10,000, something like that, right? So now you have $100,000 on a $5 million fund in year one, two, and three. That is plenty of money for you to operate on. It might not be perfect, but it's plenty of money to get started with. But guess what happens? In year two, you launch Fund Two. Fund Two is $10 million, let's just say. And now fund two, over the life of it, you make $2 million or 100,000 a year. But guess what you do? You do the same thing. So in year one of your second fund, you maybe take 200,000 and now you've stacked your fees. So you're making 300,000 in year three because you make 100,000 from fund one and 200,000 in that year from fund two. So the way you survive is you launch a fund, you launch your next fund, you launch the third fund, and you stack the fees. And so you don't need a $50 million fund. You need a much smaller fund to make plenty of money running the fund. And you shouldn't worry. Management fees aren't really where you make money as a manager. You make money in the carry. So you want to have enough management fees to live okay and then get returns through carry. And we cover all this in the program. We have some great articles about this, which I see someone put into the chat or someone put an article in the chat. But hopefully this was great, everybody. If you haven't done so, we're at the early admissions deadline. Please apply to the program. We're doing interviews. We have the single largest number of applicants in history for our program. We've broken all records for Cohort 21. Love to help you launch your fund. Thank you, everyone. Bye, guys.